All right, everyone. Welcome back to another Profit Strategies podcast. And here we are at the end of January 29th. Chris Johnson with me. Chris.
Hey, Tom. How are you?
Man, I got to tell you, this might go down as one of the most historic weeks of trading that I can recall. I mean,
Certainly.
the last time I remember literally being glued to the monitors was last year during the pandemic when Bill Ackman was talking about all hell going, that he's going to be
crying
up somewhere. Yeah, he was crying. It was the world's coming to an end, and that I'm going somewhere up in the mountains to get away from everything. But what he didn't say is that he was going to be buying up the hotels that he said were going to zero.
Yeah,
hedge fund and made billions on it. By the way,
he made billions. It's a great plan. Go away, make billions.
Yep. Hey, that's everybody's. That's everybody's dream.
Hell yeah.
Go away, make billions.
Yep.
And so with that, like I said, historic week. I mean, if we were to how do you say it?
Lay out a timeline for it.
Yes. I want to chronologically talk about this week. And so I think we start out, I really don't want to talk about the stock market this week because I think it's a waste of time, even because the stock market has a lot to do with what happened starting with GameStop. And
I'm going to have to disagree and interject something at the end here, but go ahead, Tom.
Well, I mean, let's talk about Monday. So GameStop had already been on the run last week and was up in the 60s and closed it on the 60s on Friday. So if you were involved in an option trade the week prior, which I was not, okay, so I'll make that clear. But if you were on the call side of this, and I know that there were a few people that I do know that were, I consider some of them family members and close friends. If you had bought options prior to last Friday's expiration, you bought call options, you did extremely well. I mean, $1 calls were going out for $15 just last Friday, a week ago. All right, well, fast forward to this entire week, which ended on the 29th, and the volatility was through the roof. It was really hard to be a buyer of options and make money for a number of reasons. A, because the volatility was trading in the 600s. B, because the spreads were so wide from the buy, the bid to the offer. And of course, C, because the brokerage firms really shut you down about midweek and only allowed closing positions. So I had also done a YouTube video on the YouTube channel about GameStop and how an option trader can take a limited risk, limited reward trade. And I showed some examples doing what I call one-to-ones, where if you took a put spread and you took a credit of, let's call it $1, and you were risking $1, that was a one-to-one reward to risk trade. And if you were doing it on the bear side and put a limit order in of $1 risk to make $1 reward, that was a one too. And then I even showed a neutral trade where if you took it incorrectly, you might have walked away with very little, if any risk, if you got filled on both sides at a risk of one-to-one on the call, one-to-one on the put. And it's weird because it was entirely possible to actually put on trades that theoretically had no risk in them because the volatility was just all over the place. But you had to do limit orders. And so I had that out there. All right. So when I look at the end of this week, well, who won, who lost, and why? I'm actually going to do a follow-up video because this was such a hot topic on YouTube. If you look at YouTube videos on GameStop, there was a lot of comments. There was a lot of opinion, but no one really offered up any real education on how you as an option trader could take advantage of it using volatility. I like to say I did. I didn't see anybody else other than who they were blaming, whether it was the hedge funds or whether it was the gamers, the home gamers who were taking their stimulus check and throwing it into it, or whether it was the brokerage firms for shutting them down.
Right.
There was a lot of blame game to be around in the YouTube community, but I couldn't find anybody that actually offered up anything substantial that you could look at doing. That's why I put the video out there.
I got a little sneaky backdoor trade on this one, Tom. And I think
Do
you'd
you?
appreciate it. Oh yeah,
Please
I do. I'm always looking
share.
for the sneaky. So you know what? I'm looking at my montage right now. GameStop at 335.89. So let's call it three. You know what? We'll go. I was going with 340, but this thing moves around so much. I'll drop this down to the 335 option. Looking at the May or the March rather, 335 puts. March 335 puts. I had it on the 340 for a second. You're paying $214 for 2 months worth of time premium, right? For that at the money put. So
Yep.
if you're looking at it and saying, "Hey, I'm going to short GameStop," like a lot of people, I had a friend that wanted to short GameStop. How do I do it? How do I do it? Well, first of all, you don't stop. You don't short GameStop. You're trying to catch a falling circular blade, circular saw, not even a knife at this point. But if you look at, so you're paying right now 65% premium for that
Mm-hmm.
2 months worth of time, right? But if you look at the XRT option, the retail select sector, that ETF, it is up 7.8% today. It was up 20% a couple of days ago, all because GameStop has been going higher and a couple of the others, Bed Bath and Beyond, that have been shorted, those have been going higher. The premiums for that, 17% for the next 2 months. So you can go out and buy a put on the XRT, the 90 put, which is at the money right now, for $14.95.
Okay.
$14.95 right now, and that's 17% of a premium compared to the price of the XRT, and the spread is only 5% on it right now. The spread is
Right.
not crazy. You can backdoor into that GME falling because the XRT is going to go right back down again, guys.
And Chris, let me just is are you disclosing that you are actually doing this?
I have not done this trade, so no, not full disclosure
Okay.
needed on it. I've not recommended. I've been sitting here looking for as many people have, looking for a way to scratch my head and say, "Hey, how can I backdoor this thing without really getting jammed up on the premiums?" And I think I have convinced myself that's the way that's the only way that makes logical sense for me to do
Yeah.
this. If you want to try to take advantage of the comeback on this,
And let me just mention, you brought up something that it's time for me to mention. This is that you and I are not investment advisors, so we're not recommending this stuff,
nope.
as investment advice. We are merely having a conversation with each other about what we're looking at possibly doing, and then offering up examples of how to take advantage of that.
Yep.
I did a follow up on GameStop
Hmm.
this week on powerprofittrades.com. And I talked about was a couple of things. The YouTube link is in there for those of you who want to go see the video. But also, I did just yesterday, I put out an article on 2 low risk strategies to play the market's failed shorts. And I call it the failed shorts because the ones that are failing in this are the hedge funds. So, if we were to, continue forward, well, obviously GameStop has gone up since last week, but it's been a jaggedy move. It's
Hmm.
been a tough one for anyone to make money other than the folks that are still long from last week. They can, they feel good about the fact they're still hanging on to this, even though it's been all over the place. And the what's interesting is you take a look, who are the winners? The winners right now are the small guys that
Oh yeah.
went in and bought and are doing very well. The losers, I gotta say, there's quite a group of losers. Melvin Capital was
Yep.
the loser that we all knew about because early in the week they closed out their short position and lost billions. Um, but
Citron.
I,
Citron Research.
Citron Research
Yep.
loser.
At $90, I think they were all completely closed. They started closing around the 70s, from what I understand. And then
Yeah,
they finished hedging everything out, getting it all out by the 90s. So,
but you know what? There's some hedge funds because I'm telling you right now, Chris, and you know this is true. This move that went from the $60-$70 area up to near 500 earlier this week, this
mhm.
wasn't all little guys.
No.
There are hedge funds that were trolling Reddit, and they realized that all of this chatter was likely to cause these to move higher, and they started buying in as well. There's big block trades that you can see into GameStop. So some were doing a stop and reverse.
Yep.
and that we're quietly buying it on the upside and maybe selling it now as we speak. But the loser that could be the winner, maybe a couple of those guys that don't have to disclose. I think that in a sense, the regulators might even be looked at right now as losers because there's one set of rules for the retailers, and I'm including me and you in that lump. And there's a different set of rules for hedge funds that do not have to disclose their positions.
Yep.
Brokerage firms like Robinhood, definite loser. Absolutely definite loser, especially when they, a month ago had that commercial that came out talking about we're the outsiders, we're the disruptors, we're here for you.
Right.
But no one knew until this week that they were really there for Citadel.
Did you think they would ever be pulling down $1 billion line just to get their liquidity in line overnight last night?
So many people are closing out and redeeming out of that company, and they were looking to go public. And now
so you're
I bet
ready for me to.
This puts that on hold.
You ready for me to throw out a big one this in the, when they talk about the butterfly effect and the things that happen after, down the road here, years later, but I think this will be a little sooner. Remember everybody was talking about Section 230 like 3 weeks ago, 4 weeks ago.
Yeah.
We need to take Twitter and Facebook and everybody to task. They need to be responsible for what is being put up on their sites. They need to have some liability or share some liability. It is not just a free speech forum. What is going to happen to that? And as it applies to Reddit, are all these Redditors all of a sudden going to find themselves under some scrutiny that says, hey, Reddit is now going to be more responsible for what they say if they do start to tweak Section 230? And I haven't heard anybody talk about that. That would be, I got to be honest with you, Tom. You and I have been in this business a long time. We both have friends that have been in much longer. There is definitely an old school Wall Street, a slimy underbelly, if you will. Think of it as Washington, D.C. And this would be one of those ways that they could say, well, we're not going to let this happen again. Boom.
Chris, I'm going to respectfully disagree with you on a little bit of what you just said.
Please do.
I'm a big believer in free speech, but
as am I.
I do think also that you should not hide behind a keyboard with some anonymous name. I think anonymity. I mean, if you're gonna be held to freedom of speech, you should have freedom of speech, but in your own name. Everything that I put out on the social media, which is not much, but I mean, if you look at like YouTube, which is where I and then Power Profit Trades and all of our websites that we publish on, I publish as me, you publish as you. Mm-hmm. If you're going to go on Twitter, or you're going to go on Facebook or Instagram or Reddit or Discord or any of those. And if you want to hold freedom of speech, you should be able. It should be there, but you should be responsible yourself using your own credentials
at all times. And I do wonder when it's going to be time. We've seen the politicians in the last 36 hours actually stand together. When you see AOC and Ted Cruz and Donald Trump Jr., I think it was, coming out with the same message, which is Robinhood was wrong and we need to fix this. That is going to move things. We're going to see some movement on this over the next couple of months. This will be not a 100-day item for Joe Biden. This will be a 100-day item for Congress, I believe. And I just can't help but think that Section 230 is at some point going to get whipped into this. And because both the Republicans and the Democrats wouldn't mind that being tightened down before the next midterm elections.
Now let's talk about. We got to talk about possibly we got to talk about the new opportunities that you and I both think are happening. Because that's really what, people who listen to our podcast, they like our opinions and all, but most of them are here to find out, well, what happens next? How do we, what are potential
I thought they liked our voice.
Going forward? Of course they do. I've always been told I have a great radio voice. And
I was about to say, thank God. Thank God they're not looking at us.
Exactly. So I mean,
Yeah, what do we do from here?
but you know what? Let me first talk about the winners here, okay?
Go.
And what I see as potential winners, and then I want you to pop up because you mentioned you see a new short list coming out. So before we discuss that, I think the some of the biggest winners. I'm seeing a lot of chatter about Webull, and I don't endorse brokers, but there's a lot of chatter about Webull because they're not limiting people to buying these shorts, et cetera. So they might be a potential winner out of this, the brokerage firm. The other thing that I've noticed is that once Robinhood stopped allowing folks to trade new positions in GameStop, AMC, Costs, and a few others. You know where a lot of these guys turned to? They turned to the small alt currencies.
Mm-hmm.
And I was having a conversation last night with my brother-in-law, who was up 1,000% in a little small coin called Doge, Doge. And,
Okay.
and this coin does nothing. It's worth nothing. It was literally a tenths, if not hundredths of a penny at one time. And the thing was trading up as high as 9 cents last night. And and so he was all over this. Wow, look at this coin, look at this coin. He was up 1,000%, and we are, we believe that the folks that could not trade in Robinhood and some of the other shorting stocks, they started looking at really small cryptocurrencies. Well, guess what? Robinhood turned that feature off due to high traffic. Blah 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 blah. But I think these small cryptos are going to be not the next, but part of the next. And then look at the I call it the tail wagging the dog, because I was looking at this saying, I think this is going to be great for Bitcoin, which had been trading around $30,000 earlier in the week. And that thing was hitting 38, 39 as of this morning, Friday the 29th. And so that could be the start of the next run for cryptocurrencies, because it's hard to blame somebody in the cryptocurrency environment. Cryptocurrencies, especially outside the exchanges, when you look at Coinbase and Binance, no one's going to shut those. Those can't be limited or shut down. That's the pure market. And you look at Robinhood, and there's some folks that are probably listening to the podcast right now saying, wait a minute, I didn't know you could trade crypto on Robinhood. You really can't. They have this kind of a faux cryptocurrency or synthetic crypto that they do through their firm, but so it mimics crypto. But they were kind of limiting that coming into today. But you found a short list, what's called the new short list that just got published. And
Well, yeah.
what do you got coming? What's on the list?
Let me give a backstory here, Tom, because it's not, and this is not me trying to break my right arm, patting myself on the back. But 2 weeks ago, GameStop showed up on my short squeeze candidate list. This is a list that I send to my night trader people. This is my list that I put up in my chats. I write about it on moneymorning.com. I do it about every 2 weeks. The data, for those of you that don't know, because a lot of people are new to short interest here, Tom. They don't know what it is. I've been studying this for 20 years. Twice a week, the exchanges pass out, or they give out the culmination of all the short positions through their exchange. And that is disseminated. Guys like me drop it into our database. We do all kinds of modeling with it. And I usually come up with a list of 80 or 90 companies that are short squeeze candidates. And it's exactly what you've seen here with GameStop. On the 31st of December, GameStop was number 10 on my list of short stock squeezes with the short interest ratio of 6.3, because it had just gone from 5.6 to 6.3.
Right.
That and a couple of the other companies. Kroger is on here. Sirius Holdings, Opco Health. These are companies that got bumped up by Cost. Nobody knows what Cost. Do you know what Cost does, Tom?
No, a
Oh
Costco,
my
but not cost.
No, KOSS. They make
Oh, cost.
headphones. Yeah, I used to have Cost
Right.
headphones when I was in college. So when I saw
Yeah.
Cost Corporation, I went, "Who the hell's buying Cost? What?"
Yeah,
So
that's like the Radio Shack of headphones, right?
exactly. So I looked at this and I kind of said, wow. So ironically, as all of this is going down and it's in this fever pitch right now, last night was the night that the exchanges released their short interest data to people like me. So my databases were busy overnight pulling that down, and I've got a new list, and it is interesting to see the names. And GameStop has dropped because the average daily volume has gone so high and the shorts have come down just a little bit. But there are names like Levent Corporation, LTHM, which has been on here for a while. That is one of my favorites. It's a play on energy, on alternative energy here, on lithium. Ollie's Bargain Barn. So the last time
What's
they
the
had
symbol?
a
What's the
O
symbol on
L
that?
O L L I
Oh,
O
Ollie.
L L I Ollie's.
Now
Everybody
these are not,
likes
but now let the folks listen to the podcast know some of these are not cheap. I mean, Ollie's is like
right.
close to $100 a share.
Correct. Yeah. They don't have to be cheap. That's one of the things that people think, that short squeezes happen to cheap stocks. No. Short squeezes happen to stocks like Avis, that's at $41.30. Chemours, which is a materials company. CC is a ticker symbol, 2751. Right now, it's a short squeeze candidate.
Yeah, but don't
Callaway
you think?
Golf at $27.
But Chris, don't you think that the ones that are going to be the cheapest out of your list are the ones that the disruptors are
Come
going to
on,
challenge?
Tom. God, cheap is always a relative term. It's easier for me to go and buy a share of Dean Foods at a couple of pennies right now and think that, obviously watch it go from 8 to 11 and get something that's much larger. But at the same time, the risks come with that. It is the companies that are typically, and let's digress for a second on why short squeezes happen and why short interest is there. GameStop 6 months ago, the people at Citron, all the people that were short, they don't just short it because they don't like GameStop. They looked at it and there was something fundamentally flawed with the actual business model. One of the best quotes that I've heard this week about GameStop was that if everybody on Reddit was taking $1,000 that they were using to buy the stock and
Yeah.
instead going into the store and spending $1,000 on products inside their store, the stock would go up for the right reasons. It's going up now, and it's just going to come back because what happens now is the company announces earnings, I think, in 2 weeks. And all of a sudden they're going to go, it's going to be that Alfred E. Newman moment. What? Me? Huh?
Do you
And people
think,
are going to go,
Chris?
what the hell did we buy? Yeah, go ahead.
Chris, do you think there's going to be the insider selling because these guys, the executives, have seen fortunes come in that were and
Absolutely.
especially I mean, there's going to be key people in here that had stock options, and let's say their stock options were at $10 or $20, and they just saw it worthless. That now all of a sudden the stock options are in the hundreds. They've made 10 or 20 times what that stock option strike was going for. And we're talking about ISOs, guys. ISOs are basically company stock options that are granted as rewards for hard work to executives and key people. And these are people that literally threw this stuff in the trash like a lottery ticket, and they're now digging to find it because they realize it's worth something.
Yeah.
You
You
think
know
there's
what?
going to be some selling of those soon?
Oh, I'll give you a name of one. Ryan Cohen, the guy that is a CEO, co-founder of Chewy's, Chewy.com. The guy
Yeah.
bought 12.9% of GameStop last year for $76 million. It's worth 1.4 billion right now. He got 1,700. Tell me he's not going to be selling some of those. And obviously you have to do the filings for those to get those as he's on the board. He's an insider. But the thing I think I look at here, Tom, is if this were a real move that GameStop knew they could do something with, they would be floating an offering right now
Oh
and
yeah.
getting that money into their pockets so they could start feeding their business model. And that's not happening. And that tells you there's going to be problems with GameStop down the road.
Yeah. Yeah. All right. Well, uh, you know, with that, I think we wrap it here. Uh,
You know what? Let me throw
yeah.
something out there.
Final thought.
Favorite three stocks as we go into next week. Go.
Me?
You. Putting you on the spot.
Well, it's easy. It's for me. It's Bitcoin, Ethereum, and not Dogecoin for sure. But I also like the move that gold made here, on the last day of the month of January. So I'm going outside of the stock market. I think the stock market's where the risk is. And
Okay.
so I want to stay out of the stock market. I want to focus going forward on, those alternative assets.
Gotcha. Okay. Good.
You?
I'll give you my three. It's U.S. Steel. Steel trade is going to chug higher again right now. Part of that recovery rebuild trade that's going to keep us going through 2021. Camping World Holdings is back in a seasonal strength right now. Everybody's going to be buying campers over the next 6 months or so. They're already on back order. And then the third, I'm going to stick with the hometown favorite, Workhorse, WKHS. They got a huge bump. We're up 30%.
Yeah.
And
Well,
we had calls in
and
Night Trader on it. They got a big bump because of the Biden administration announcing that they're going to
exactly.
start. But this is the fundamental picture that's going to carry a lot of these stocks through 2021. So I'm sticking long term with Workhorse, WKHS.
Yeah. Yeah, I too am in. My largest position I have right now. I'm not going to say what stock it is, but it
Mm-hmm.
is in the commodity related companies like U.S.
Mm.
Steel. All right, so I am with you on that. I'm a
Oh,
little
okay. Now
nervous
you're making
that
me
the
want to guess here, Tom.
no. But you might, has the train left the station on somebody like Workhorse because it was time will only tell, Chris. But I
Time will
do like
tell.
your thinking there. All
Thank you.
right, folks. Well, thank you very much for joining us again for this week's Profit Strategy podcast, and we will see you again next week. Bye now.
See you, Tom.